FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome, and you are listening to the Financial Survival Network. I'm Kerry Lutz. It's October 1st, 2018, start of the all-important fourth quarter. Well, you see that GDP is running now 4% plus. Will it hold up? Hey, what's going on with oil? You know, I looked today, WTI, West Texas Intermediate, is trading about $73.50, and Brent Crude is over 80. What's it all mean? Well, first, as always, be a part of the show. Email us, kl@kerrylutz.com. So, person you're about to hear from, Dee Carter. Dee, you got a new book, and yeah, so, and you got some opinions on the good old black gold sector. The name of the book, it's Now or Never, How to Enjoy Your Life and Not Let Your Investments Own You, which sounds like a very positive and good advice to many of you out there. Dee, welcome back.
Hey, thanks, Kerry. I appreciate the opportunity to be back with you again.
Hey, sure. So what's up with oil? Why is it heading higher? Normally, there's 2 things that drive oil. Well, 3 things. Greed, of course, drives all traders. You got political instability, geopolitical instability, and then you got expanding demand, which is usually a result of expanding economies, which doesn't seem to be taking place except for here in the good old US of A.
And that is exactly true. And you know, it wasn't that long ago. We've the Energy Information Administration, the group that talk about these things, the Department of Energy, they issued a recent statement that said U.S. oil production now passed Saudi Arabia in February and Russia in June and August, which makes the United States production the largest in the world, which is really kind of a unique deal. And part of that problem, or part of that blessing, if you will, is that they're discovering all kind of new things in West Texas Intermediate crude. The West Texas area in which I live, the Permian Basin, is the largest producer of oil now in the country. And the problem we've got, and the reason and of course, you know, the Brent comes from the North Sea primarily. And a lot of the listeners may not know what West Texas crude means, or light crude. It just means oil is lower in density and less sulfur content. And the refiners really like that because it doesn't take as much refining to get the gasoline out of it, to get the other products that they use petroleum for. What we're seeing right now, though, is the pipeline capacity in the United States is really a problem. We're actually producing like 3.3 million barrels a day in West Texas crude right now, and the pipeline capacity is only like 3.1 million. So we're looking at a couple 100,000 barrels a day, and that's a lot of oil that is sitting backed up either in the Oklahoma hub or somewhere between where the wells are and getting down to Houston. In fact, they're building new pipelines right now out of West Texas. We should have those things completed by probably by 2020. If we do, that's going to, and that's a 36-inch pipeline, Kerry. That's a huge pipeline. That may bring us back to a little bit more normal situation. But the reason we're going right now, oil is based on 1,000-barrel purchases. If you go to the broker and buy the oil, you're based on 1,000 barrel. It's really a demand type situation. It's also what is the buyer willing to pay. So whatever's paying right now at 73. It started at 73.25. I think this money went up to 73.50, as you just mentioned. Brent's around $81. They don't produce as much Brent crude out of the North Sea as we do here, but it's still, and it's harder to get to. That's one reason it's higher. It's harder to get out of there because, after all, it's in the North Sea, between Scotland and Norway. In fact, I just came back from Scotland. They're number one income producer in Scotland. I didn't know this. I thought it was Scotch whiskey all these years. Turned out it's oil.
Oh, yeah.
So, yeah. But anyway, the main problem we've got right now is that while the supply has outstripped the demand, it's also backing up at the refineries because there's no way to get it to the refineries, and that causes the price to kind of increase a little bit while it sits there. I think we're going to see this level out. Nobody in this area expects West Texas Intermediate to go above about 73 or 73.50 like it is today. I think we're going to see it. It may get as high as 75, according to the people that I'm talking about. But most of the guys are saying it's staying around $73 to $74 a barrel this year and next year, and should average out about $6 a barrel lower than the Brent crude over the next year or so. But it's really because of you're right, the supply and the demand. We've got more oil right now. We're producing more than we have a demand to burn. That will change some in the wintertime. In the winter, when the northern states start using more oil because they primarily heat with oil there, you're going to see the price kind of level out at that time because they're going to be getting more oil and they're going to be able to get it to them. So it's just a matter of supply and demand, as you so well pointed out just a moment ago.
Yes, and of course, the U.S.'s infrastructure, refining infrastructure, pipeline infrastructure, kind of been maxed out, but due to President Trump, we see new pipelines getting rapid approvals and getting built almost as quickly. So this is just really... It's not a demand issue, it's a supply issue, the inability to meet the market, because the U.S. just became the largest petroleum producer and energy producing country in the world again.
Yeah, and it's a neat place to be. And, of course, in West Texas, we love it because it means our economy stays booming at all times out here because of the production of the oil. But that's going to continue, I think. In fact, the clients I have, and I have clients that work on literally, I have clients that work on the drilling rigs. I have guys that own the drilling rigs. And so I can talk to both ends of that situation. But we have drilling contracts all the way out for the next 3 years. Some of the guys are telling me they have contracts to drill new oil wells all the way out to 2021. So I don't expect this to change a lot between now and then because of the amount of money that's already being spent on drilling. In fact, my wife and I were driving down Interstate 20 here yesterday, and they're drilling 2 giant oil wells right next to the highway on Interstate 20. In fact, they had to fence them off because they're so large. They're called triple stack rigs, and these are huge rigs, which means they're going down real deep. We're going to be producing oil out of here for a good while.
Oh, yeah, that's for sure. Hey, well, it just shows what the pundits know, because we were at peak oil. We were never going to have enough oil, and therefore we had to worry about, getting energy from the sun, from the wind, from the seas, from, who knows what. But
exactly.
all of the pundits have been proven incorrect. Now, one thing that had happened was when oil crashed a number of years ago and it was down $20, $30 a barrel, it really put the hurt on the oil tool industry, the oil services industry, led to mergers like Baker Hughes and Halliburton, all that. But and that also, because the cost had gone up so high because the demand was so high, it led to like really high-priced exploration and development costs.
It did.
What's going on in the patch now as far as that goes? Has it stabilized? Because they were losing money, the oil services sector.
They're making money now, Kerry, at a record rate because of number one, the number of wells that have been drilled. They're drilling new wells every day all over the place out here. They're drilling them on the golf courses, for crying out loud. It's everywhere. In fact, everybody in Midland has been getting contacts to sell or to lease. Well, actually, people want to buy their oil royalties under their houses in Midland. I mean, you're living on a little bitty lot, and so they're even buying up royalties all over the place. It's crazy.
Yeah, I remember a person I knew in southern suburb of Dallas had a commercial property there, and they wanted him to sell off the drilling rights so they could frack for gas, because there had never been any real development in the Dallas area. It was not, that wasn't a resource economy there. It was, higher end technocratic manufacturing services and all that industries. And they were, it seems like the whole state has got something there.
Well, in fact, it's the shale production, because the shale production is statewide, basically. It's more dense, obviously, in the West Texas area, because the Permian Basin, which was at one time a sea, as you're aware, that's where most of that oil is located. And they're discovering fields everywhere right now. It's amazing how many fields they've discovered just in the last 2 years in the shale production. And the shale production is fast production. It's quick. It goes down more rapidly than the other type, but it's there. And right now, everywhere you look, they're drilling another oil well. So it's going to be that way, I think, for the next, the guys tell me at least for the next 2 to 3 years, they've got drilling contracts all over West Texas. And as you pointed out, it's spreading east from here, going to Abilene, all the way up the highway to Dallas-Fort Worth area. So they're finding places now that they didn't even know they had before. And that means this is going to be around for a while. I don't think now we may see the price go up to maybe to 80, 81 if the Brent's at 81 now, but it's averaging out about 74. So it's not a big factor. I think you're going to see $74 to $75 oil for the next year and a half. Then it could get as high as 80. But once these pipelines are completed, you made a great point about the president opening up a lot of these things going on. And it's amazing how quickly they can make a pipeline if all the oil companies get together and work together on it. It's unbelievable how fast they can do one. So we're looking for, in the next year or so, to have this new 36-inch pipeline opened up from the West Texas area down to Houston so that we can get the oil that we've got backing up in tanks. We've got tanks that are literally at capacity here because there's no way to get them to the refinery right now.
Yeah, it's fascinating. Hey, I've heard nobody mention ANWR, the Arctic National Wildlife Reserve, where part of the tax cut deal, they agreed to open up ANWR to exploration finally. I know I saw a couple of things, a couple of big, huge strikes up in Alaska, but I haven't really seen anything about it. Any word on your end there?
Well, the main reason for that is the expense of getting up there and drilling the wells. That's a very expensive place to drill. The difficulty to get into the areas that are there and set up your rigs, it's really more expensive to drill in the ANWR than it is down here because of the topography more than anything else. It's hard to do the job there. Here it's nice and flat, and you can get to it without too much trouble. And the cheaper they can get to it, obviously, the more money they're going to make. So they're going to drill primarily in the areas that they can make the most money in. And right now that's in the Permian Basin area because it's flat out here. I mean, you can see your dog run away for 2 weeks out here in this country. So that's really the reason that ANWR is not being talked about very much, because the cost of going up there and the transportation of tools, the transportation of everything, and then getting into that area and doing the drilling. Yeah, there's a lot of oil there, no doubt about it, but it's more expensive to get it. So they're going to the places where they can get it cheaper right now, and that's right here in West Texas. Yeah,
it's definitely more expensive. But if the pools are as large as they say, and it's light sweet, it's light sweet crude, eventually they're going to get to it, right? It means
absolutely.
It makes a big difference, because the state of Alaska, if it wasn't for the oil industry, they'd be fishing for Alaskan king crab and salmon. That would be their...
You can't make a lot of money with salmon, that's for sure, and even with salmon oil. But you're right. Eventually they will get to it, and I think what you're going to see is a lot of the money that's being made here is going to be put back toward drilling in other areas, and ANWR will obviously be high on the list because of the amount of sweet crude that they think is there. And these guys are amazing. They can figure this stuff out now. Amazingly.
It used to be a guy went out in the field with a divining rod, and when it shook, that's where they drilled. Now they drill based on seismological data and a lot of other data, and it's unusual to come up with a dry hole. It's like 9 out of 10, strike oil now, where it used to be 2 or 3, or 4.
Well, and another reason for that is obviously that with the directional drilling, they can literally go down, turn the drilling stem, and look for it. They can literally look for it while they're down there and don't have to go drill another hole someplace else. So you really don't have a lot of dry holes popping up, as you just pointed out correctly, because they can literally search for it after they start drilling. They go down and change the direction and go another direction with it. So it's amazing what they can do now. The technology that is increasing has become so unbelievably good that they can find the oil after they start, even if it's not where they thought it was, they can look for it while they're there. And it's amazing how much they can find.
Speaking about looking for it where it's there, where it is, we got like big problems in Venezuela and in Iran. I mean, Venezuela's production after they nationalized the oil industry there just plummeted. It's less than half of what it was 15 years ago. And their reserves, nobody's exploring for oil there, but their reserves are still pretty substantial.
Yeah, I think that has to go back to the socialistic government they've got. That has to go back to that's another failure of socialism. Basically, it's what it is. In my estimation, I think most people that would have observed this and have done any study about it at all will tell you that nationalizing something like that is the biggest cause for the problems the problems they're having in Venezuela and any other place where you have the government in charge of the situation. If you don't turn the guys loose that know how to make the money, you're stuck with it, and that's what's going on. They don't know how to do it. They don't have and they've literally eliminated a lot of our guys from even doing things down there. So they're actually hoisted on their own petard, if you will. They're not going anywhere quickly, and the main reason they're not is because they're not allowing people to come in there and do what they need to do to make the thing work.
Yeah, the oil company basically hired a bunch of hacks. And
there you go.
And you're totally unqualified, and they dumped the people who actually knew something. And look, our leathernecks, they're the best in the world. You know, they've drilled more oil under more different circumstances than any other oil workers in the world. So to just dump them and send them out and then get rid of the skilled people who are running the company, who are like technocrats and, middle management, and put in hacks, what do you expect to happen here? It's like Cuba running out of cigars and sugar,
That's exactly right, and it's all back. It all is back to the form of government that they have, and it's we're blessed to have the opportunity to do the things that we do here, as far as in West Texas. If it weren't for the really the aggressive nature that the Trump group people have done in our area, and kind of freed up some things that we needed to have done, we probably wouldn't be in the place we are today. But we're thrilled to death with what's going on in West Texas, and in a couple of years, I think we're going to see this thing level out, and it may stay. Once it levels out, Kerry, we may have this thing staying for a long, long time in the $75 to $80 area, and maybe as high as $85. I don't think you'll ever see. Most of the guys here are telling me you'll never see $100 to $110 barrel oil again, because of the way they're controlling it. So, they put the heat on Saudi Arabia this week, as you read in the paper this morning, to increase because of the Iraqi situation, the Iranian situation. So I think we're in great shape. I think the country's in great shape. If someone comes into my office and said, I'd like to invest in an oil company, I don't think that's wrong. I don't think if for the short term, I don't think it's a good idea to do it for retirement planning, but it's certainly not if you're wealth building and you got some young people that want to get into that area.
Yeah, and the majors certainly offer the opportunity to reinvest your dividends and to build wealth that way. There's nothing better than reinvesting dividends on high-yielding stocks, right?
Absolutely. If you're going to get into that sort of thing, you need to find the thing that you've got a guaranteed return and a guaranteed dividend, and you're going to get it where you can reinvest it. And we certainly believe in that. Although, like I say, most of my work is done in the retirement income area, and I'm trying to create income. I had one of my clients came in and wanted to convert his dividends into income, and I said, at your age, that's a perfect idea. You should do that, and it's perfectly doable. So I like to really get into that if we possibly can. But I point that out in the book. I've got some things in the book that actually tell people about how to get started, where to go, and how to do it, how to get their retirement income started in a safe way, or at least a safer way, and to make sure you've got money as long as you live. But the oil business is certainly booming in West Texas, and it's going to cause, I think, an economic. Well, you see it at 4.2% of the GDP. Wow, I never thought I'd see 3 again.
Yeah.
And here we are at 4.2. So, wow, I'm having a great time with it.
Obama said those jobs were gone and they weren't coming back, right? So,
well, he's short-sighted, obviously.
Yeah, well, if Hillary had gotten elected, he might have been right, but fortunately, we don't have to think about that. So, what about your book? Tell us about that.
Oh, the book was written for three different groups of people that have never done any retirement planning at all, those who have been started but really kind of got bogged down and really didn't complete what they were trying to do and didn't really have anybody working with them. They was a professional, but it's also written for the professional retirement planner, the people that do what I do on a day-to-day basis. And the main reason for that is because they're still training brokerage people today the same way they did when they started me in 1974 when I first got my brokerage with the first appointment that I had. I don't think that we live in the same world. We obviously don't. The clientele today coming to me are much more intelligent. They're able to go online. They're able to look at things differently. They're able to get some of their questions answered. I will say this, that some of the information they get online is not great information, but at least they have the opportunity to go out there and educate themselves. So that's the reason I wrote the book. And also I wanted people to realize that we get one shot at it. We go around one time in this life, and I want my clients to realize that they can have a good time, enjoy their life, and not be so hung up about where their investments are that they worry about them every day. And so I wrote the book for those people, too. I wanted them to realize there are ways to get there. And I give directives at the end of each chapter. There's about 18 or 19 chapters, and each chapter ends with what I call Dee's directives. And it starts off with little things like set a budget, talk about debt is your enemy, talk about the government wants you to do certain things that you need to know how to do it. And there we're talking about Social Security, obviously. But there's something for everybody in the book, I think. And it's going quite well. I just had a book signing at a Barnes & Noble's in Abilene, Texas, Saturday, and had a great crowd there. We've had 2 book signings here in Midland. It's actually selling better than I ever thought it would. But people can go to Amazon.com and get it. Just look up "It's Now or Never." My name, Dee Carter, and go to Amazon.com and buy the book. And when they do, I would appreciate them giving reviews. We're getting really, really good reviews, and I appreciate that as well.
All right. Hey, well, Dee, it's always great to have you on the show, and thanks for filling us in on the latest developments in the oil biz. We'll definitely talk to you again soon, and be well.
Thank you, Kerry. I appreciate the opportunity.
All right. Hey, and before I forget, just email us, KL@KerryLutz, with any questions, comments, Twitter feed @KerryLutz, and Facebook page Financial Survival Network. Read the show notes. There'll be a direct link to Dee's site. Just tell us your site again, Dee.
You can go to Dee Carter at financialincomecouncil.com. It's a very long title, but you can find it on there without too much trouble.
All right. Well, we'll link it so you won't have to remember it, so don't worry about it. Dee, we'll talk to you again real soon. Thanks for stopping by.
Thanks, Gary. I appreciate the invitation.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.